Hi, Paul.
Hi, Paul.
Hello, how are you, Tom?
Everybody, good
Good.
morning and good afternoon, wherever you are. My name is Faraz. I head the Financial Services Department at the Economic Development Board. Let me begin by welcoming all of the 116 attendees to this workshop. We are grateful that you took your time to attend this webinar, and I think we've got an excellent panel lined up. And I think we're going to have some constructive discussions around fintech as the next enabler and Mauritius as the connecting dot for the region when it comes to the distribution of financial services driven by technology. I am pleased to note that we have guests also from France, Nigeria, Switzerland, Kenya. So it is a privilege to have you on board. Now, the purpose of holding today's webinar is twofold. Firstly, it piggybacks on the roundtable session hosted by the Fintech Association in November last year around the regulatory reforms and the regulatory nitty-gritties, as well as the regulatory enablers for driving the ecosystem forward when it comes to the fintech industry. Of course, the opportunities presented during the roundtable also meant that the participants to the roundtable session discussed a number of points, including information sharing and financial inclusion, promoting the ease of doing business whilst protecting customers, which is very important. And absolutely, this is the talk of the town nowadays. It is the fight against financial crime. Now, that's the first part of why we are hosting this webinar today. The second point of why we are hosting the webinar today is to deep dive into what Mauritius has to offer as a fintech hub and as a financial center. And of course, what it is that is going to take us to graduate or to leapfrog into the next hub for fintech. I know it is a tall order, but I think it is important that we have a webinar that discusses it with all the stakeholders around the table. And of course, we welcome all your questions and answers. I'm going to take Q&As as and when they come in or at the end of the session. We also look forward to your comments, whether or not it is a question, but we want to know what are your thoughts when it comes to being the next generation of hub for fintech in Africa. Before I start into the session, some housekeeping rules. I will ask all of you to keep your questions as concise as possible, because we don't want to waste time reading the questions. We want to take the time to answer the questions. That's the first thing. Second thing is, please turn off all your cameras and mute your microphones. Now, today I have the great pleasure and privilege to have a panel that is exceptional in my view. So I'll begin by Tom Mylrea-Lowndes. Tom is a fellow board member of the Mauritius Africa Fintech Hub, but he is founding board member of the Fintech Association. He is UK based. Tom will be providing us with an overview of the regulatory landscape in the UK, but he will also talk about what the Fintech Association has been doing. Secondly, we have the privilege of having Vikash Thakoor with us. Vikash is the Chief Executive of the Financial Services Commission. And as most of you are aware, the FSC is the integrated regulator for non-banking financial services sector and the global business sector in Mauritius. Thirdly, we have Paul Perrier. Paul is a fintechpreneur, if I may use that word. He is the co-founder of FundKiss, and FundKiss has been the first crowd lending platform in Mauritius, the peer-to-peer lending platform. So Paul will walk us through a little bit about the journey that he has had as a fintechpreneur and as a disruptive investor. And of course, we are going to end with Yusuf Bauluck. Yusuf is the head of regulations at the Fintech Association, but he has been the person who has been driving the regulatory roundtable sessions at the level of the Fintech Association. Now, I'm not going to take much time, but and I'm not going to be here to stand or sit between you and the panelists, but I'm going to just give an overview and a context about this webinar before we hand over to the panelists. Now, as all of you are aware, you know, prior to the outbreak of the COVID-19 pandemic, it was very clear that fintech would play a pivotal role in the way that financial services are going to be delivered. Now, the COVID-19 pandemic has undoubtedly accelerated this process, and we are where we are today. So Mauritius has played a key role building on the leverage that it has with regard to technology and financial services to become or to strive to become a fintech hub. The government has recognized the digital revolution. It has already implemented a number of key enablers, including regulatory sandbox license for fintech projects. But over and above that, Mauritius boasts a number of prerequisites to become that platform, including the expanding 4G and 5G network, over 27,000 of multilingual IT professionals, 15,000 multilingual financial services professionals. So we have a highly educated workforce, we have high bandwidth connectivity, so we are there in terms of having all the enablers, and also we are there as a very conducive business environment and a jurisdiction that protect the assets, be it in terms of copyrights, but be it also physical assets, movable property, etc. So we have all the necessary ingredients when it comes to positioning the jurisdiction. I mentioned to you, of course, some of the panelists are going to deep dive into all those elements, but you have the sandbox license, but you also have the regulatory bodies in Mauritius, like the FSC and the Bank of Mauritius, which is at the avant-garde when it comes to fintech regulations. One of the ways that the jurisdiction has been looking at regulating activities is that nothing is being done at the detriment of commercial viability or at the detriment of doing business. So our regulations, the sandbox, the regulations, the central bank's digital currency, whichever is coming forth, is going to ensure that the commercial viability is there and that, you know, ideas are able to be protected and to be explored. Now, this has been the vision of the government of Mauritius, but of course we can talk about that a little bit more later. Without further ado, I would like to give the floor to Tom. Tom is going to walk us a little bit about what the UK has been doing and to take a leaf from developed economies journey for fintech and see how Mauritius can apply them and see how we can make sense for the region in the broader sense. So Tom, over to you.
Thank you very much for the introduction. Great pleasure to speak to everyone today. Briefly introduce myself. So I'm a qualified lawyer currently based in the UK. Well, actually currently based in my study in Oxford, as I have been for the best part of the year, as we will all know. Although I've studied and worked in several countries, I trained at an international law firm and I currently work at Accenture, but I have experience advising startups, fintech associations and governments with a particular focus on emerging markets. And for the purposes today, most importantly, one of the founders and currently non-exec director of the Mauritius Africa Fintech Hub. So as sort of set out earlier, I'm going to start by talking a little bit about some things that have been happening in the UK. There was a consultation process run by the UK government in 2020. Before I dive into the outcomes of that, I think it's worth just briefly setting out that the UK divides responsibilities for the regulation of financial services between several regulators. So you've got the Financial Conduct Authority, which regulates the financial services industry. You've got the Prudential Regulation Authority, through which the Bank of England regulates and supervises financial firms. And you've got many others, including payment systems regulators. What's interesting as well is this is similar to Mauritius, which has a multi-layered regulatory structure. I won't talk too much more about that now. Faraz and Vikash will cover that in more detail later. So in 2020, the UK government carried out a review of the future of the financial services regulatory framework in order to make sure that it would be fit for the future. Now, this followed a call for evidence where the UK government seek the views of all stakeholders in the fintech sector. And the main theme that came out of this consultation was the need for collaboration between regulators, and in particular to ensure transparency and dialogue, and that's between all stakeholders, regulators, firms, etc. Hence the call for evidence. Also, efficiency and coherence, and that relates to the authorization, supervision, and enforcement of financial services, which helps to avoid sort of duplication and conflict, and also proportionality. So in order to avoid disruptive administrative burdens for firms trying to operate in the space. There are a number of regulatory reforms that are being proposed that came out of it. Looking back a little bit, obviously the UK launched Project Innovate in 2014, and this led to the introduction of the first regulatory sandbox, which has been a huge success. And also, I'd like to mention the success of the sandbox in Mauritius, although I think Paul will speak a little bit more about his experiences in that later. And I understand the FCA is working on the creation of a global regulatory sandbox, which would be something truly spectacular, I think, for the financial services space, but is a long way off still. So following the 2020 consultation, UK regulators are committed to seeking to improve coordination and transparency. They've earmarked several steps to try and achieve this. Signing of MOUs between financial regulators, senior officials sitting on each other's governing committees, dialogue in terms of policy making, and very interestingly, data sharing between regulators. And I think this is a space that is really worth monitoring, because I think it could really lower the burden on firms trying to comply with regulation. Quite often, the collection of this data is a complex, time-consuming and costly process. And when dealing with several regulators, you might end up collecting some of the same data. So I think this is one area I'd highlight to watch. The outcome, as well as they've created something called the GRID, the Financial Services Regulatory Initiatives GRID, and the commitment of the GRID is to provide a 2-year indication of upcoming regulatory initiatives, which will be published twice a year. And the aim of that really is to help avoid duplication and conflict in the regulatory space. And this is to be managed by a new forum called the FS Regulatory Forum. So that's a little bit about what's happening in the UK. Let me turn to what I see as emerging trends to sort of fintech. I think Faraz, you spoke perfectly around COVID, which is unavoidable as a key theme at the moment. But for me, I always believe in innovation and change following times of crisis. We very much saw that after the 2008 financial crisis, which for me was also one of the reasons why the regulators in the UK took such a long look at the way things were structured, and really thought about a commitment to competition, enabling disruption, which led to the Project Innovate. So I think we're at another time where innovation and change will hopefully follow this time of crisis. It's certainly already sped up the move to digital. We're all speaking to each other today from around the globe, and it's something we've got very used to. So that's already sort of a big change I see. And innovators will always look to solve consumer problems, and consumer problems are changing. There's a real need for affordable credit. There's a real need for small business loans in ways that we haven't necessarily needed before. And I've seen talk about some innovation in the payroll space. Interesting ideas such as salary on demand, advances in salary, even some more out there ideas like the payment of salary in crypto. But if I was to pick 3 key growth areas looking forward, the first I'd pick is data, and I touched on that earlier. I really do think the way data is collected, the way that it's treated from a regulatory perspective, you know, if we look at liability and risk in the sort of open banking world and the ownership of data, I think that's going to be a real driver, and the countries and regulators that get that right, I think will act as enablers. I think RegTech is a huge area. Traditionally, I've heard a lot of talk and would defer to Paul on this, but regulation being one of the big barriers to entry for firms looking to enter the fintech space. So I think RegTech is a space where if it can reduce that barrier to entry, make compliance with regulation easier, but also really importantly, make it much easier for regulators to understand, keep up with the changes, and ensure that they're collecting what they need, then they can ensure that they are protecting consumers and complying with, you know, with their priorities, while equally enabling the reduction of the barrier to entry. So RegTech and decentralized finance, obviously, it's something everyone talks about, but for me, sort of regulation and supervision of cryptocurrencies is something that's going to become more and more important. So what does this mean for the African region? I think fintech for me provides an opportunity to increase financial inclusion, and this really is a global issue, but it's an issue that I think is a very important one, and one that I think that fintech has the ability to make one of the biggest differences to. As I say, it's a global issue. You know, in the UK where I am today, it's estimated that there's 10 million underbanked people. That would be people that don't have access to sort of the full spectrum of financial services. But looking at Africa in particular, it's estimated that about 66% of the population is unbanked. So there's a huge opportunity there. And I think, as Faraz touched on earlier, it's got the world's youngest workforce, and the majority of this workforce will have access to a mobile phone. So there is a real opportunity for change there. I am constantly amazed by the examples I see of what I've seen referred to quite nicely as needs-based innovation around Africa. And sometimes I've also heard it referred to, rather than disruptors, as sort of the emergence of creators, really developing innovative solutions to local problems. And something else I would touch on here is the fact that emerging markets, having missed the PC generation and moved straight to smartphones, quite often this does mean that there is less of an issue with sort of outdated legacy systems, which permits, I think, these enablers to come up with innovative solutions that in some respects are easier to implement than they might be when you have the drawback of the legacy systems that need to be updated. So let me bring this round to why I think Mauritius is really going to play an important part in the emergence of the fintech sector in Africa, and why it's emerging as a really important hub for the region. I think it can draw really useful comparisons from London and from Singapore, two of the world's most successful hubs. Looking at London in particular, using the lessons from developing a proactive regulatory landscape in a multi-layered regulatory structure, and we're seeing great progress there. And then looking at Singapore, I think in terms of becoming a regional hub, exploiting the positional advantages that Mauritius has as a gateway across Africa, Asia. So some real lessons, I think, to be learned, but also examples of why it's perfectly placed. Fundamentally, for me, there are 3 key pillars to the success of a fintech hub. The first of which, for me, very much is proactive regulators. I think that that's an essential first pillar, and something I've seen fantastic progress in since I've been working at MAFH. So the creation of the Sandbox I've touched upon, and Paul's going to go into more detail, and dialogue with stakeholders across the fintech sector, which is why I was so encouraged by the outcome of the Roundtable, which I know Yusuf is going to touch on later. The second of the three pillars for me is support from the government. Again, I've seen fantastic examples of this in Mauritius, the provision of licenses, the introduction of new legislation. We've seen the introduction, for example, of the P2P lending rules, amendments to the Banking Act recently to cater for digital banking initiatives, but also all the indirect support that the government does, which is essential in terms of improving ease of doing business and reducing barriers to entry. And the third, and I would say potentially most crucial, is the promotion of the fintech sector. And this is where MAFH really does come in, and why I think MAFH's going to play an important part. What MAFH can do for the region is it creates a community in which the sort of fintech ecosystem can really network. This will provide members with a network in which they can grow their businesses. And MAFH's been appointed to host the African Fintech Festival in 2020, which has been postponed and will be held later in 2021. Details to follow. But also just the promotion of the African fintech sector globally. You know, I'm constantly speaking to people in the UK about the excellent work that MAFH is doing, and that will increase the support and hopefully the inflow of business coming from other parts of the world to Africa. I think the second is the facilitation of open dialogue between all the stakeholders. This really does help innovators to understand the regulatory landscape they work in, for instance, but also important in helping regulators keep up to speed with the ever-changing landscape in which they're seeking to enforce and supervise and regulate. I've touched upon bringing deal flow to the region, but I think MAFH's going to play a really important part in that, increasing sources of investment, connecting fintech firms with companies who can offer valuable partnerships going forward, and then also capacity and skills building. And we've seen some great examples of this through sort of webinars like today, thought leadership, the workshops, roundtables, and also engaging in universities and schools as well in some of those projects. So really important work being done to engage with stakeholders across the sector, across Africa, and then shining a light on that more globally. So I'm going to stop there. I think I'm up to time, but happy to take questions now or at the end, as people prefer.
Thank you, Tom. We are getting traction with regard to questions, but it's coming in. It's taking some time, so I think we'll keep some of the questions for later on. But Tom, excellent intervention. One of the words that I've been hearing throughout the intervention has been data, and data. How we look at data, how we treat data, how there is collection of data between regulatory bodies, and how there is sharing of data within the regulatory bodies. So I understand, you know, if we want to go for fintech, data and the way that we manage data and how we make sense of data is extremely important. So one of the keywords. The second one is need for regulations. I think you've painted the picture quite well that, you know, there has to be regulations where there are needs for regulations. The third word that I keep on hearing throughout your intervention, and very rightly so, is efficiency and coherence, which is extremely important when it comes to the fintech landscape. And of course, you spoke about the global sandbox, but I think that is quite a tall order because rules are normally jurisdictional by nature, and we will have to leverage on treaties to have that. I think that makes sense.
It is a tall order. It's good to dream, though, and I think it's a tall order we should aim for, the moonshot.
Yeah, absolutely. We just have to focus on the utopian concept, but you're absolutely right. I think if we have multilateral treaties that are going to govern sandboxing, I think it would be good. But this paves the way nicely, you know, data regulatory bodies, need for regulation, etc. Paves nicely for our next intervention by Vikash. So Vikash, it is a privilege to submit the floor to you.
Thank you, Faraz. Thank you, Tom, for setting up the nice introduction to this theme today. I just start by a very short introduction for myself. For those who might not know, my career path is that I started, and I am a technology person, and worked for 25 years at the central bank before I moved to the Financial Services Commission. So meaning that I've got the experience of perhaps the both worlds in terms of bank and non-bank finance. And before just leaving the bank, I was very heavily involved in the setting up of the national payment switch in Mauritius, which in my view is one of the first introduction of such a project where fintech activities are allowed and fintech activities get carried out by operators. We always had this this problem of thinking, where do we start? It is always a chicken and egg problem, because we did have regulators, operators coming to say, we need to set up something. And then when you look at the ecosystem, basically they had to reinvent the whole. So that switch comes at a point where a central core system is set up, which perhaps comes in most cases, it is the one which requires the highest investment and has the least return in terms of setting it up and having it make it operational. But that was done just as a public good, so that operators can now use it. And this is where data, and you're speaking about data, where the ability of that system to connect to the bank for the operators to be able to get account information about what are the bank details or bank statements. This was rendered possible through regulations. So it was already one phase where, way back in 2018, one of the I would say pioneer laws, if not to say regulations, were set up in Mauritius, and that was the National Payment Systems Act, which basically is already one of those enabling legislations that allow and legitimizes payment operators as separate entities to banks, which in those days were very much bank-centric. And now, thanks to this law, these have been rendered operator-centric, and where this ability to carry out a service is completely dissociated with the position and the place where you hold a bank account. So having said that, I would just like to say that when it comes to regulations, regulators always basically are quite criticized in this area, because in many cases, and most cases, technology comes first, and then you have regulators required to catch up in terms of what are the activities. And it is not always that, especially those people who come up with those innovative ideas, that always appreciate what is the standpoint of the regulator. You're right to say in the UK, the process has been similar, where there have been consultations, and you mentioned a very important concept, that as a number of regulators need to collaborate. And that is the reality here also in Mauritius. We all are aware that fintech activities, they normally sit on the overlap of a number of regulatory domains. And if you look at who has to regulate, we generally come on the regulators such as the Bank of Mauritius for the banking sector activities, the Financial Services Commission for the non-banking. But then we not always forget some regulators like the Communications Authority, where the operators now come from these domains, so they need to be involved. And also, and not to forget, the Competition Commission, because all turns down to an ecosystem whereby the regulators need to to collaborate. And this brings to the second aspect of what the regulators normally look at is basically what do they regulate. I've always been telling in a number of seminars, in discussions where I have had this opportunity, that a technology cannot be regulated. No regulator can come and say, I am regulating this technology. Regulator will always look at the activity behind the technology that is being used. And those activities are, for instance, the use cases behind the technology. Let us take blockchain or the distributed ledger. There is always a service, an activity that is rendered by use of those technologies. And the regulator will have a focus on that activity. Of course, bearing in mind that perhaps this same service is being now rendered through a new technology, and therefore there is a paradigm change in the way things were being done. But the regulator looks at the activity and the use cases, and we do find in most cases, and those which are very practical and come down to what is closer to the people, those which are disruptive in the way services are being rendered, they come out to be new ways of doing some of the traditional things. You took the example of, and we have done it, these peer-to-peer lending, and whether they are crowdfunding. We find that informally people used to have persons sharing information and sharing money to do something, but now there is a platform that comes in, and this therefore has to be regulated. And the other question now the regulators always have a focus on is why they have to regulate, and that's very important. Had it been solely, for instance, for a technology provider, you would say, okay, let me set up my activity and I'd be happy to do it. Many people come with wallet services and say, okay, we are happy to do, and leave us alone. But the point, and the important point, is that it is better for a regulator to have under its purview, even if that regulation is not perfect, an activity which is regulated, so that there is what we call those higher objectives of the regulator that need to be applied, and that is the protection of the customers. It is very important for the regulator to have and focus that the regulator needs to protect the customers, and therefore also provides these institutions to take into account what we call those systemic risks. And once the regulator has got a broad idea of the activity and the areas under which these regulations are being brought forward, it becomes much easier for the regulator to come up with the right regulation. In most cases, I would say the regulator is here to support the innovation, not to stifle it. But then the regulator comes with another bigger challenge, and that challenge is to keep a right balance between the technology and the transparency of the activity that is being carried out, to have a very good regulatory flexibility, but no regulatory arbitrage. We must not forget that, as I mentioned, in most cases, we have got a fintech activity. It's a new way of doing a traditional thing. And if that traditional thing is being carried out, is a licensed activity, then we need to ensure that there is no arbitrage between the two. There is no, I would say, situation whereby one is seen to be given an undue advantage. A very simple example of one could be a payment service provider. Traditionally, banks have been in this domain. They do provide payment services. But then you will see that banks have got what we call a very heavy infrastructure and heavy cost of giving those services, simply because they are under the bank license. And if you take a non-bank payment service provider, these are what we call a lightweight service providers. So obviously the cost of investment for a bank and a normal one would not be the same. And therefore, if you just allow a non-bank to operate as is, you will be creating a big arbitrage between those who are traditionally there. And these are the things that perhaps take sometimes more longer for the regulators to come and to put the appropriate regulation to ensure that both are at par. And with these, excuse me. So with these new challenges that coming in, the regulator also needs to take into account this integrity of data, the algorithms and the platforms. And you started mentioning in data, Faraz, you also said, what is the reality is that in future, the value doesn't normally lie in the, for instance, in the payment service, it lies in the data behind it. You will find more and more payment services being provided free of cost because the providers are more interested in the data behind it. So having said that, let me now come, if you think it gives me the right platform to start talking about some of the areas whereby legislations and regulations have been brought forward. One I mentioned was the Bank of Mauritius payment system hub, where the regulations are already there for payment providers to be able to operate. And the other point, very important one, is the fact that the National Payment Systems Act mentions already that any payment service provider operating in Mauritius has to be licensed by the Bank of Mauritius. So that is a very important and clear delineation of the different activities and the reach of those different regulators. However, we all know that a payment service does not, or a fintech service goes on the span of a number of regulatory domains. So you could have, for instance, tomorrow, an operator in the field of insurance, for example, giving an insurance service. It is still a fintech service, but then we'll have a leg attached to the payment leg and use the national infrastructure of the country. And for such situations, we do have inter-regulator MOUs that allows such facilitation, that allows those activities to be carried out. And between the joint coordination committee between the Financial Services Commission and the bank, for instance, these things are discussed so that if one a service provider is licensed in one area, then the other leg becomes easier. I not say that it becomes automatic, but it at least becomes easier because of the fact that it has been licensed on one leg of it. And in the last part of my intervention for this area, I would like to say that at the level of the non-bank activities, that is from the Financial Services Commission, a number of initiatives have been launched since quite I think a few years, and the Commission has been very much interested in what are the emerging trends, what are the global players trying to implement, and what would be these regulations. Normally, they do take some time. However, with respect to some of the activities that have already been regulated and therefore have become licensable activities at the Commission is the recognition of the digital assets and investable assets for for sophisticated investors or expert investors. The Commission is also has issued regulations for the security token offerings, which therefore allow and opens up the door for a wide range of activities whereby security tokens could be offered, but in exchange of real assets. We are very, very much aware of the activities so that we are not caught up with what, for instance, the international trendsetters are watching us for doing activities that might go easily into the money laundering domains, etc. So we already have the security token offerings, and we are, just to mention, we are just very close to completing the regulations for the crowdfunding, robotic and artificial intelligence-based advisory services, and the financial services providers activities. So this is where I will bring my intervention to an end here, to say that as a regulator, we are very much sensitive to two things: those who want to run an activity and what is going on internationally in these areas. Thank you.
Thank you so much, Vikash. I think there has been a lot of wisdom in what you said, but a lot of legitimacy as well, because it comes from the regulator's mouth. You're absolutely correct, and I've noted a number of points. Of course, you've spoken about big data, and big data is important. Of course, it's also important of what we do with the underlying data once we have them. That is important. But you touch on a very fine point. Why do we regulate? And I think that should be at the back of every fintechpreneur's mind when they are going to the regulator, and of course the regulatory body when they are issuing a license to the regulator. We regulate to protect the jurisdiction from systemic risk, yes, and to protect the end users and the customers. I think that is very important. You've also spoken about fintech activities that stretch across the spectrum of the regulatory domain. Have you spoken about insurance, for instance? And I had my list, my team gave me a list of fintech activities, and I think we can share this with the attendees as well. Wealth tech, insurtech, digital sukuk issuances using smart contracts, savings and wealth building tech, digital bank, robot advisory, and reg tech are areas that would probably disrupt the way we do business in the very near future. Before I go over to Paul, Vikash, let me ask you a question. The question is as follows: can you please explain how Mauritius is introducing the appropriate regulations to ensure compliance of fintech companies without the regulatory framework being overburdened? And I think you've touched that a little bit, but I'd like you to share a little bit of what are your views, Vikash, to this.
As this one is, I would say, a tricky one, because it adds basically two things that are not already, which are not always easily brought to conciliation. We have, on one hand, without overburdening the regulatory framework, and then to bring the appropriate regulations. The simple answer to this one is, first, there is no straightaway formula for everything. It's more and essentially a case-to-case based undertaking. And the way we proceed at the Commission is normally a two-tiered approach, where first there is a research carried out with respect to other jurisdictions where such activities are being held, so that we therefore benchmark ourselves on the best practice. And the second leg involves a public consultation as well as the consultation of the industry. And this gives us the opportunity to embed within those regulations a number of points of view coming from those who would actually go to use these activities as a commercial activity, and therefore we have got direct inputs from them. And it also allows us to have the way of thinking of a number of experts, and therefore the regulations are therefore written what I would say it to be not optimal, that I would say it is friendly with the industry. It is industry friendly, and they have participated in it. As for example, even when we had completed this peer-to-peer, we did have representations to change some parts in it, which we did, and therefore became closer to what the operators of those activities were looking for. So to the term, I think on the simplicity of the regulations framework, there are no direct way to do it. Sometimes when we are trying to plug in what already exists in existing regulations and based on regulatory activities that are traditional, normally this is where we burden it. So no, we do write separate regulations that attach to the base act.
Thank you for this, Vikash, and I think you've spelled it out clearly, and thank you for the questions. I think the maître mot is that regulations are made in consultation with industry representatives to ensure that it aligns at least or at part with what the industry's expectations are. The last point that you spoke about, Vikash, is a very fine point because it connects the dot with Paul Perrier's intervention, is you do not regulate the technology, you regulate the distribution of the financial services, and that is very important. It begins the question, what happens when there are no regulations, which is the case of the Sandbox. And I think there is none other than the first applicant to the Sandbox, Paul. Paul, over to you. I know you're in quarantine at the moment, but the floor is yours. Thank you.
Yes. Hi everyone. Thank you for the invitation and opportunity to share our story to the participants today. A little bit about me, my background. So I'm Mauritian. I come from corporate finance. I worked at PwC previously, and also had an experience in retail where I launched and developed a chain of beauty stores in Kenya. So this experience I had in corporate finance in Mauritius and Africa, and also the development of this chain of stores in Kenya, opened my eyes on the issue of access to finance for SMEs and small businesses. Big companies, big groups, they have a lot of choice of options to finance their growth and their developments. They have their shareholders, they have banks, obviously, with whom they have long relationships. They have access to stock exchange in Mauritius. They have the bond market obligations, which is developing as well. But when you look at the SMEs, especially the micro, small and medium, they challenge to have access to finance. So this was a little bit the analysis behind and the outcome behind the launch of FundKiss. And so with my two co-founders, we decided to launch this business, and our vision initially and still is for FundKiss is to simplify and democratize the access to finance for SMEs in Mauritius and hopefully beyond through the technology and a different model. So we estimate in Mauritius only, based on the different data available, that the SME gap in financing is about 10 billion rupees. So this gives you an estimate of a potential of this market. Now, how all this started and how I'm able to speak in front of you today, if I can summarize our journey so far, it would be in two keywords, which is timing and collaboration with all the stakeholders of the ecosystem. Timing is back when we first had this idea of launching FundKiss in 2016. The ecosystem and the regulation did not exist at all. But in this year, 2016, the ecosystem started to get structured. We had the first incubator which was launched. It was Turbine Incubator, and we participated in their first test drive program. Then, when we finished this program, we approached the different authorities to explain our idea and what we wanted to do. They all, be it the FSC, EDB, Ministry of Finance, they all said it's a good idea, but wait, in June 2016, the government is going to come with a new piece of legislation for innovative business ideas, and it is the regulatory sandbox license. So indeed, in 2016, in June, this was announced in the budget. And once it was voted in Parliament in December 2016, we were the first FundKiss to submit our application for the regulatory sandbox license, and we obtained this license in 2017. From there, we accelerated to build our platform, to finance the first two projects, we approach business angels to get into the equity of our startup, so we could move full time in the business and accelerate our operations. And we managed to do it in December 2018, and in January 2019, it's really when all the operations of FundKiss started. The co-founders moved full time. About the same time, the Mauritius Africa Fintech Hub was launched, the African Crowdfunding Association as well. So it was a very good start for us. 2020 was, I would say, a turning point. We in the budget this year, crowd lending was identified as a new mechanism to boost the SME financing. And in this respect, we welcomed the first institutional investor on our platform, SME Equity Fund, which lends systematically on every project. The FSC also came up with peer-to-peer lending rules in August, and in October last year, we submitted our application. We also financed our 100 projects in December. So there's a lot of positive milestone that we have achieved, and it's really through this collaboration and with all the stakeholders that we have been able to achieve this. So now some of you might think, yes, but 100 projects in 2 years, it might seem long, 2 years, but in 2 years, it's also 100 projects. It's a very short time. We need to understand that the ecosystem in Mauritius is can be conservative. You have legacy institutions which have been here for many years. You have the customers, the clients, borrowers or investors who needs to be used to a new financing solution, a new investment product. So we are building all this, we are communicating a lot, and we are seeing the traction coming, and the trend is accelerating. And for us, in the coming weeks, there are also new milestones that we are looking forward to reach. We are investing in a new platform that we will launch soon. There is obviously hopefully the graduation from the RSL and the obtention of a peer-to-peer lending license. We are also looking forward to reach 100 million projects finance over the platform, which we think will be achieved over the next by June this year. And then also there's a potential development in the region and in Africa. And what also is very interesting is that we are seeing the institutional investors in Mauritius starting to approach us to see how we could collaborate to service better together the SMEs in Mauritius. The COVID has been difficult for many businesses in Mauritius, but I think it has also been an opportunity for some and for FundKiss. Because we are digital native, we are a digital solution. The applications and onboarding are made online. And when we had this lockdown, the use of our solution allowed many small businesses to have access to finance and find the cash flow they needed to survive this period. What FundKiss brings on the market is it's a completely new customer experience, which is more simple, which is faster, which is more transparent, and I think that the market in Mauritius is starting to be open to these new solutions. We also offer, compared to the competition, unsecured lending, meaning that we do not ask collateral or warranty. So everything is based on the credit analysis we do. And as the panelist mentioned previously, data is extremely important. And it's something we are leveraging on, and we want to go more into this data analysis. And also there is also a trend today in Mauritius is that, and elsewhere in the world, obviously, but SMEs want to diversify their funding solutions beyond the traditional institutions. So that is why fintech in Mauritius has a big future, and that there are massive opportunities that are in front of us. But we need to do it step by step. We must not rush. Work together with the authorities and the stakeholders. Yes, that's it from my side.
Thank you so much, Paul.
I saw some questions. I don't.
Yeah. There is one question for you. You want to take it? So the question is as follows. Hi, Paul. Will FundKiss open up to the rest of Africa?
So it depends. It's definitely in our plan. Mauritius is it's in our markets, in our industries. It's also all about volume. Okay, we have estimated the market in Mauritius to be around 10 billion. So there's a lot of things to do, but we obviously want to develop in the region and in Africa, more specifically around East Africa, where we think there are opportunities there for us. And also that these countries in East Africa are coming up with legislation, regulations around crowd lending and peer-to-peer lending, which we could leverage on. Also, we are in the process for the peer-to-peer lending rules. But one of the items in the P2P rules is that a platform is allowed to lend money to operators outside Mauritius and in different currencies. So maybe this is also one aspect that we will leverage on in the coming years.
Absolutely, Paul, and I think the regulations we spoke with Vikash as well. So the regulations are being have been amended. So I think that's good news. Now, before we go to Yusuf, I think there are two questions, and Vikash has to leave as well. There are two questions there are three questions actually, and I think the first one is Barbados aims to become a fintech hub for offshore fintechs, but only for A-grade fintechs, which will be carefully vetted. This approach is being deliberately taken to build on Barbados's position in wealth and wealth management. Where do you see Mauritius's comparative advantages? Thank you for this question. I think if we look at the financial center in Mauritius, and if you look at how the financial services sector is structured in Mauritius, I think most of the, just give me a second, please. Sorry about this. The way that you look at the structure of the financial services in Mauritius, I think you would see that most of the segments that are driven at the level of the financial center is based on the comparative advantage that we have with regard to a jurisdiction. And we're already there in terms of wealth and wealth management, in terms of private wealth, in terms of trust and estate planning. I think the graduation from conventional and traditional wealth management to fintech-driven wealth management, including robo-advisory wealth management, is one that will be driven by the market conditions. I think that is important. Whether or not we'll have the comparative advantage will depend on the products and product suite that we are going to have. That's the first one. The second one is going to be on the market that we are going to service. And I think in terms of wealth management, the market that we are servicing is the exceptionally affluent and the high net worth individuals at the moment in a number of emerging economies. And the third advantage will come from the enabling environment. And I think when you look at Mauritius, you would see that not only there is the Sandbox, not only there are regulations at the level of the Banking Act, but also at the level of the Financial Services Act. Not only there are instruments like the Foundations Act, Protected Cell Companies, and as well as Trusts Act, but you also have the National Authentication Framework, which is here in Mauritius. And you have centralized KYC. One of the big things for high net worth individuals and exceptionally affluent people in terms of wealth management is really contingent on the service they have from a jurisdiction. And I think a number of countries do not do this. The known to the jurisdiction concept is very important. The FSC is working on the known to the commission concept, but you will have with the eKYC, you will have known to the jurisdiction concept, which therefore essentially means that once you use Mauritius for wealth management, once you have a license already, it goes smoothly for the next licenses. And I think that is important. I will take the third question and I'll give the second one to Vikash. The third one is, how do you think the African free continental trade area will affect the fintech space? Now, there is a long and there is a short answer for this. I'll go for the short answer. The shortest one is, if possible. The AFCFTA is still at protocol and negotiations level. Of course, there are the chapters in trading goods and trading services, which will be negotiated as well. But what is interesting is that in the services chapter, there will be the mode 1, which is cross-border supply of services, but you will there, I think, with the evolution of fintech, you will see that I'm pretty sure a number of member states across the EU are going to want to have modalities of market access and opening of fintech space, opening of market access for the fintech space. So let's wait and see how this pans out. But I think, notwithstanding the services chapter, I think fintech is there to become the enabler for trade, be it trade in goods or trade in services. So I think it will positively affect, to answer the question. So to Vikash, financial conduct, which I've seen a focus on sandboxes to provide licenses to fintechs, such as FundKiss in Mauritius and Pesesha in Kenya, it is important to be ahead of the game when talking about financial conduct. It has become a huge issue in nanocredit in Kenya. How is Mauritius going to respond to this issue proactively?
Thank you, Faraz. It's interesting when we talk about the fintechs and the obvious comparison, or I would say the review of what has happened to those countries who have been pioneering in this area that's come up. I do believe, and I've always maintained that a direct comparison with the Kenyan or even the Tanzanian market with that of Mauritius is not always a good thing. In the days when M-Pesa was the hype already in Kenya, there were several studies carried out and the extent to which such a service could be given to Mauritius. And the obvious thing that came out was the financial landscape of the two countries. Kenya was a highly unbanked country, and Mauritius was a highly banked country with an ATM density and a banking density, which was around, I think, the ATM density in Mauritius is less than a kilometer, meaning that whenever you're standing, you have an ATM. And there is also the fact that everybody has got a bank account. So the M-Pesa model in the way it was could not be compared. And here also, I think that given that FundKiss has got its own system, in own way of approaching the market and of ensuring that they have got the investors, it could not be directly compared with the way the Kenyan nano credit has, and I would use the word evolved, because they were a natural evolution from M-Pesa normal payment, and then gradually to provide what they call the micro credits over those payments to come to a system. Whereas in my view, the FundKiss, the concept straight is completely different from the onset. It doesn't aim at as being evolutive, it is straight away a completely different product. But we'll have to wait and see.
Have to wait and see, absolutely. So I hope this answers the question. But without further ado, again, Yusuf, you're going to talk about the outcome of the regulatory roundtable session that was held in November last year by the Fintech Association. I think it is a very laudable initiative, and I think what you have achieved is extremely important to be shared with the stakeholders. Over to you, Yusuf.
All right, thank you, Faraz, for moderating that event. Just before I start going into the details, a brief background about myself. Professionally, I was admitted as a barrister at law in England and Wales and in Mauritius, and been practicing in Mauritius and worked at some UK and US law firm in London. And latest position as head was at Econex, a software as a service company, as in-house counsel for the EMEA region. And I'll just, before I go into the details of what transpired from the regulatory roundtable, I'll just pick up on what Tom mentioned during his intervention about proactive regulators. What most of the attendees and myself we've noticed is that the Financial Services Commission has been quite proactive, starting with the issuing of a fintech series, dealing with digital assets, security token offering, and accompanying trading platform. And lately, we've seen the consultation papers requesting input from stakeholders on robo-advisory and settlement framework that has been issued recently. So that's what's happened in terms of proactive regulators in Mauritius. But I'll just start with saying that I think what Faraz mentioned earlier on was we are bound to be regulated. And I'll add to that phrase of yours, Faraz, that it's all about the journey and how we get to the regulation. It's about consultation that we've been hinting on throughout that webinar. And with that was the main purpose of that regulatory roundtable, to get all the stakeholders together with the regulators to discuss the shortcomings of the current regulatory framework and the challenges that they are facing and how we can improve it. And also its purpose was to inform the stakeholders and how the upcoming regulation might affect their business operation. And ultimately, we want to, but the outcome from it to educate the consumers and also the innovators and fintech entrepreneurs, and use what we gather, the data we gather, as a foundation for regulatory reform. And hopefully those reform can be used as a showcase and show the best practices in industry across Africa and potentially globally. So that's what transpired with the objective of those of the regulatory roundtable. And I'll just share my screen with the participant now, and just to give you a brief presentation. So that's a breakdown of the attendees that participated at the regulatory roundtable. So we had people from the banking, non-banking financial institution, a few people from the telecommunication industry, fintech industries, business associations, higher education, and diplomatic mission as well. And we have regulators from the Financial Services Commission. We also had the Ministry of ICT and Innovation who were present, and the Ministry of Financial Services and Good Governance. And that event was facilitated through the help of members of academia who acted as moderators, also members of MAFH, and some individuals from the PR agency who acted as transcribers during the event. So I'll just move on straight away into what, happened during the discussions. So the main, it was broken down into 3 topics, and one was under the theme of Open API and eKYC. There's been a great interest into picking up onto Open API, mostly to deliver new services, for example, InsurTech to customers, but also to use financial data of consumers to build up credit scoring, which can facilitate, for example, peer-to-peer lending activities. But there has been also concern about, since it's personal data, really sensitive data belonging to consumers, about confidentiality and privacy. And in that respect, there's been recommendations made to the Bank of Mauritius in that respect regarding the design, development, and implementation of Open API across the industry, so that guidelines can be issued for both developers and users. And also, as Paul mentioned during his intervention, it's a lot to do with education and raising awareness. With Open API, you open the doors to open banking and tools that can be both facilitating easing the life of individual, but can be misused as well if they are not familiar with it. So regulators and various stakeholders has a lot to deal with raising awareness among consumers. So that was in terms of open API. We also discussed about eKYC. We've noticed during the discussions that although there's the number of unbanked entities in Mauritius is very low, corporate and private individuals have not experienced much difficulties to have access to a bank account. However, the situation is very much different for small and medium enterprises, and it is the opinion of most of attendees that eKYC as a tool would help to reduce those delays. And we mentioned throughout our discussions during today's webinar about the use of data, and it's been the case that data can be leveraged to increase access to financial services, and even open API can lead to open banking initiatives, which would provide a large range of products to consumers at a much lower cost and be more transparent as well. So that's in terms of open API and eKYC. And I'm checking my watch and I see that time is a pressing issue right now. So I'll quickly jump onto digital signature, which was the main topic, with the theme that it would be promoting ease of doing business while protecting consumers. So in terms of promoting ease of doing business, there's been a lot of discussion about how the cross-border transaction at the moment is costly, and it prohibits or hinders cross-border transaction between Mauritius and other jurisdictions, especially but the cost of a remittance on average has been recorded as 9% of the transferred fund, which is a high rate at the moment. And it is with the help and assistance of technology, this fee can be brought down. And there's also been the mention of over-reliance on original documents by financial institution and non-banking financial institution, and the physical presence of customer during onboarding. And that has been put to test, especially during the recent lockdown that we experienced with the COVID-19 pandemic on the island. And a few of the attendees who were present have been using digital signature to facilitate their business operation on a day-to-day basis. But the figure has been reported as very low. On 30 of the 77 attendees questioned, only 10% was using digital signature. But the figure changes drastically once they have clear guidelines and they are very willing to consider the use of digital signature. So that's the concern regarding digital signature. And there's also been the concern about the validity of digitally issued signature by a local certifying authority when used for cross-border transaction, which will be taken up with the ICTA, which is a certifying authority in Mauritius, for further guidelines and recommendations that can be issued in the meanwhile. So just moving on to blockchain and compliance, the theme in the fight against financial crime. The attendees had a good awareness of financial crime, especially with the recent FATF recommendations and guidelines that have not been followed, unfortunately, and reported. The attendees mentioned that nowadays that there's a need for the regulation to match with the reality on the market, and well, with a large amount of transaction happening, it's humanly impossible to keep track, and we need to leverage on the use of technology, for example, artificial intelligence, to be able to detect fraud more easily, and also to use a blockchain to limit the risk of tampering with records and prevent fraudulent activities within financial institutions. But also, the FSC has been commended by the attendees for its responsiveness in issuing scam alerts regarding suspicious activities in Mauritius, and also entities that are using Mauritius as a window for illegal activities that has been highlighted as well as a very commendable highlight of FSC as a supervisory and regulatory body in Mauritius. And moving on to my next slide, those are the stats that we recovered from 30 of the 77 attendees. So as we can see, there's a high demand for open API, and that stems from having access to consumer financial data, which would facilitate newcomers onto the fintech industry, for example, digital bank, which would be able to build a credit score and straight away for their customers that they are onboarding. Just one example, but also it's about delivering customized and bespoke financial products and services to customers based on their risk profile and credit profile as well, which at the moment we have, the Bank of Mauritius has started to promote Open API through the MOCAS platform, which allows interoperability and transfer of funds from different platforms, mobile, internet, payment terminals as well. And as we can see from the next pie chart, the amount of entities using digital signature is relatively low compared to international standard, only 10%. That's, I mean, from the information we gathered, that's mostly because of a lack of guidelines and awareness as to how digital signature can be used and should be used into different circumstances. And but the figure just changes drastically once we mentioned if new guidelines and from the regulators would affect them. And the figure jumps to 57% in that case. So it shows that regulators being proactive, issuing regulations simply does not affect the market as such. It needs to be accompanied by a period of awareness and guidelines to clarify matters for the various stakeholders for them to get on board and use the tools and simplify their business activities and deliver a more customized and at a lower cost services to consumers. So that's just an infographic of how regulators are currently collaborating in terms of the regulatory Sandbox licensing committee, where we have the Ministry of Financial Services and Good Governance, together with the FSC, the Bank of Mauritius, the Ministry of Finance and Economic Development with the ADB, together with the Attorney General Office and the Financial Intelligence Unit, collaborating together in to approve projects for which there are currently no regulation or the current regulations are inappropriate for such projects. So it shows that there's room, and we have seen it throughout the year, but the regulators are sharing information among themselves as to how to make Mauritius into a better fintech hub, along in the line of transforming Mauritius into an international financial hub. And I think what we've been using from the input of the regulatory roundtable so far, it's that we've used it to make recommendations to the Bank of Mauritius, to the Fintech Committee, and also that has been used to the COMESA Business Council in terms of issuing a harmonized payment guidelines policy for the COMESA states. And also that has been used throughout the interaction with different business associations. And I would just like to hint that at the moment we need to have a coherent regulation because we are pushing forward for an eKYC platform, which would require sharing of consumer financial data. And we need to look into the confidentiality requirements, and especially under the Banking Act 2004. So I'll just end here. I can see that my time is already up, but
Faraz, may I add a remark, Faraz?
Please, Tom.
I just wanted to highlight that what I've been listening today is all of the perspectives of key players in the industry pushing in the same direction, and really came through to me the commitment of the regulator not to stifle innovation, but to protect consumers and the system from systematic risk. Listening to FundKiss's journey, and the ability to innovate within the space. For me, this is why the Mauritius Africa FinTech Hub is so vital, because what it provides, as we've just heard, is the ability to collaborate, have the dialogue, improve awareness, give all the players the information that's required in order to move to the next step. You know, without that, I don't think you would have seen the progress of companies like FundKiss and others. And so I would just reiterate that events like the Roundtable are a really vital part of ensuring that the ecosystem keeps moving in the right way.
Thank you, Tom, and thank you, Yusuf. I think it's absolutely vital and essential, like you said. I think a dialogue is extremely important when we are talking about disruptive technologies and disrupting the market. I think it is extremely important, and I think we have to give it to the FinTech Association for bringing together the public and private sector under the same roof, and try to see if we can have convergence of ideas. I think that is extremely important, and we would encourage all the attendees and all the participants to this webinar to also participate in future roundtable sessions as well. Now, I think we have come to the end of this webinar. We still have two more questions. David, I get your question, but in the interest of time, I think in terms of financial conduct, and we have to consult a bit with the FSC as well, I am sure that the FinTech Association is going to take the matter up with the FSC and with the core group, probably in terms of AML, CFT and financial conduct, and they will come back to you through email on the answer, but I hear you loud and clear. The other question is, will the FinTech Association has launched an education program, how banks and FinTech companies are identifying talents, both local and international. I'll take that. I think, I don't think it's a secret to anybody that financial services companies and financial intermediation companies like banks are very aggressive when it comes to headhunting, but I think the question goes broader than that. I think over and above the work that the FinTech Association is doing, there is also synergies being developed at the level of the government entities, including the Financial Services Institute, which is a government of Mauritius initiative to try and bridge the gap of financial services operators. That's one. And of course, with the tertiary tertiary institutions in Mauritius, like the University of Mauritius, and as well as other educational authorities in Mauritius. So they're trying to bridge the gap in identifying the talent. So they will have a pool of talent that they are going to train. But before training, I think they are putting together a curriculum that is going to make sense to the type of segment of activities which are coming in Mauritius and as well as in the African continent. So I think it's a question and it's a matter of connecting the dots. It's all about the education authorities, the operators, as well as the intermediaries being the government bodies. They're able to connect the dots and they're able to feed into the need. It's a needs-based system. So the needs of the industry operators through the government entities and policymakers directly to the curriculum drivers. So I think once those training are given, we are bridging the talent and we are developing young, bright minds I think that in consequence will give us a pool of talent, and that would be for banks and fintech companies. Now, what I'm talking about is predominantly local. There is also the opening up of our borders to foreign talents, and Mauritius has always done that. We, in the last budget, which is the equivalent of the State of the Union address, the Honorable Minister of Finance has introduced a number of incentives to encourage foreign talents to come and domicile themselves in Mauritius, them and their family, including extension of the occupation permit program, which is being driven at the level of the Economic Development Board. You used to have your occupation permit, which is basically your work and leave permit for a period of 3 years renewable. That is set outright for 10 years now. So, you know, you and your dependents, spouse and children, you're able to come to Mauritius, you're able to acquire ground plus 2 immovable properties, you're able to acquire properties, immovable properties, houses, in schemes like property development schemes, as well as smart cities, so that, you know, you can elect Mauritius as your permanent abode or your habitual abode. So there are a number of ways that we are opening up the borders. So we want to encourage the young bright minds in Mauritius to give them the traction and momentum, but at the same time we want to encourage the foreign expert community as well, be it in fintech or be it in financial services, to come to the country. It's not a bad place. It's COVID safe. It's the tropics, so it's a great place to come and live in. So I think Paul, you agree with me, right?
Yes, this is what I was going to say. We are COVID safe, and I think in today's world, it's a huge advantage.
And I'm sitting in snowy Oxford. I can only concur. But what I would just add to that, and we're out of time, but I think in this post-COVID world, I think the talent pool is also that which can collaborate across borders. And there is such a broad talent pool across Africa. And there is a real opportunity with driving kind of a best-in-class approach to the way Mauritius conducts its regulation, creates the ecosystem that will then create digital opportunities for people to work in the region across borders. So I think that's another important element that will only be more important as traveling becomes more difficult.
Absolutely. Thank you, Tom. And just to piggyback on what you said, last thing, you know, Mauritius has also introduced a premium visa now for 1 year. So you are able to come to Mauritius because it is COVID safe, and you're able to, you know, conduct your businesses or your activities from Mauritius. All of these information are available on the EDB's website. So of course we are short of time. So I would like to, before I end, to commend the Mauritius Africa FinTech Hub for hosting this webinar. I think it's been a great one. I would like to be very grateful to our panelists who have imparted a lot of wisdom. I would also like to thank my team at the level of EDB internally for having coordinated a few of the matters. Benazir, Yusuf, and Mix, and of course Tom, Paul, Vikash. Thank you so much, all of you. And thank you all the attendees for being with us. We hope it was useful, and of course we're always available through emails. Please do feel free to get in touch with us. Thank you so much.
Thanks all.
Thank you, Faraz. Thank you.
Thank you, everyone. Bye-bye.